Hey traders, welcome back to another Sunday video where we prep for the week ahead and talk about trading setups that have high probabilities and potential in this market that we are trading in. It has been a crazy couple of weeks, and if you stick around with me in this video, we'll be taking a look at gold and silver. We'll look at some currencies. We'll of course look at the dollar, and of course we will always end up taking a look at the indices as well, the S&P 500, the Nasdaq, the Dow, all of this stuff and more in today's video. All I ask as we get started is that you hit the thumbs up button on this video and subscribe if you're new. By doing this, it tells YouTube that you'd like to see more of this type of content, and it really supports my channel. I really appreciate it. So we've got a lot to talk about here. I wanted to actually start out by discussing gold this week because I did close out of a very profitable trade on gold, and just to hype myself up for a bit, I actually did end up closing about a $25,000 profit on gold. And because I haven't done it for a little while and I figured maybe I should, I'll show you the gold trade and just show you my logged in brokerage account. There's the trade, $25,000 or so, give or take, on the gold position. I trade ETFs, so GLD is what I use to trade gold. But also just wanted to show you year to date where we're at. I am in profit, although, it's been a rough start to the year. That being said, in comparison to, if we take a look at the Nasdaq or let's take a look at the S&P 500, I'm doing okay this year so far, and we can also take a look at the Nasdaq, which has gotten really beaten up this year so far, down about 8%. And like I said, my account's up about 2.4%. Now, of course, I know that's not super impressive returns, but given that the stock market itself is down quite a bit and I do hold a lot of stocks in my portfolio, I'm feeling pretty good about my overall positioning. Speaking of positioning, let's talk about this gold idea. So like I told you, I actually ended up closing out gold. I got stopped out right around here for a profit. I went long over here, and if you've been watching the channel, you probably know this trade well by now. I ended up trailing my stop loss, which was initially below this previous low, trailed it here, then trailed it here, then trailed it here, and that ended up getting triggered on Friday. So I want to talk a little bit about where gold is at for my gold friends who also trade gold. Again, like I said, this is one of my favorite things to trade. Closed out a nice profit, and actually definitely the most profitable thing I've been trading so far this year. Been giving back some of those gains in other areas. So just to give some transparency and context, I took a Bitcoin trade that did not work out. I lost some money on that, and some of my stock holdings have been in the red here so far this year. We'll talk more about that as we get into this video. Let's break the technicals down on this gold move. So we've broken decisively above 3,000, and got to give credit to the bulls here as we retested that 3,000 psychological level on Friday. You can actually see that buyers stepped back in and pushed this right back up to that 3,025 level. And again, that's looking really strong. Now, I do have to pat myself up on the back a little bit here. I'm in now a profitable silver position. Well, actually, let me not pat myself on the back because that's not really moved very much for my entry. But I did end up getting into a silver position, and I've been waiting for this level to get tagged. So I got in on this sell-off on Friday. Pretty nice little pullback there on Friday for silver as well. And I actually have a confirmation from the Edge Finder when we take a look at the silver bullish rating here. What we can see is we're getting a +6. What that means is that most of our indicators within the Edge Finders, economic data screens, technical screens, and sentiment screens are giving us a bullish confirmation on silver. But I gotta admit, gold is looking shiny as always with a +12 score. So if I can get a bigger pullback on gold this week, I will definitely be looking for that opportunity on gold. And I want to show you guys something. I've got something kind of excited to leak here for you. We are currently working on something really cool at A1 Trading for our members in the Discord. And if you are a member in the Discord, this is coming to you for free. Not just ready yet, but it's coming. This is a trade tracker, and this is live updating every 15 minutes, showing you my positions. We will also have Frank's positions in here so that you in the Discord can easily pull up anywhere from your desktop or mobile device the trades that we are currently in. So here's a lot of my stock positions. I'm also in a euro pound short position. I'm in a silver trade. As I mentioned, there's the trade. I'm up 1.89% on the trade. So this is coming soon. This is the new A1 trade tracker. I'm really excited for this, and I'm hoping you guys share that excitement. I've been working and programming on this all weekend, so hopefully you guys are excited for that feature as well. But just going to be an easy way for traders who are within our VIP service to see the trades that we're taking on a real-time basis, or relatively real-time. It's updating, like I said, every 15 minutes or so. So silver looks good, gold looks good. From a fundamental perspective, I really still like these. There's some wobbliness in the US dollar, some uncertainty about the US economy with all the tariff stuff going on and just how much that could shake up the markets. People are worried about that. And I actually just have been looking for opportunities to continue to trade this to the positive direction. Like I said, if gold gives me a bigger pullback into the next week, this is to me an opportunity to start stepping in and looking for buy side opportunities once more. I like both of these setups quite a bit from a technical basis. If we see a larger sell off, which, let me be fair, I don't think is going to happen very likely because I think gold is in such a runaway move right now, I would not be surprised to see this thing continue going. That being said, I do find this price action to be a bit extended, and I think it would be very healthy for the price of gold to actually come down and test some of these key levels for us, which would give me a great opportunity to rejoin this trade. I'll be watching the 4-hour chart for confirmation, as well as, of course, staying true to the system that has gotten me to where I'm at, the edge finder, right? I'm looking for those bullish signals to stay strong when I take the position on gold if I can get that entry. Like I said, I'm already in the silver trade, going to play that to the upside. It's not a huge position for me, but it is a trade that I'm watching. So going to watch gold here this week. Really, definitely interested in a bigger pullback if we can get it, and then looking for, again, something like this signal that we got over here, right? I'm looking for some kind of poke down, some shoot to the downside here, and then show me some signs of strength, and then I will likely be looking for another long side opportunity. I would not be surprised to see gold hit 3,100, and I actually think that by end of year, we could definitely see levels like 3,200 on the price of gold, given the uncertainty that comes with Donald Trump. Whether you love him or hate him, the dude has a lot of activity that he wants to get into. A lot of his ideas and things are again, contrarian, against the rye. People sometimes love that, sometimes people hate that. But Trump's a volatile dude, and so with that, the market is likely to be volatile. I think gold continues to be a safe haven asset for people who want to kind of check out of that volatility. I briefly mentioned the US dollar. Let me do a little bit of a breakdown here on that. So the US dollar, again, big level support gets hit around 103.5. We've been teetering back and forth. I would not read too far into this. This is just consolidation the last few days. We really need some guidance from the Fed, more so on where we are going to go with interest rates. But we kind of heard from Powell, and he seemed decently optimistic relative to the market's perspective on the whole tariff situation. So when we look at from the dollar's price action perspective, again, really just a choppy range-bound market. The dollar bears held their gains here last week. We just basically chopped around sideways. And what I'd be looking for is, if you're a bull, right, we just need to see this thing kind of break with some conviction. Perhaps we're going to see a retest of some levels here. I would not be surprised. I am a dollar bear right now. I think that the dollar is likely to continue lower, but I do think we could see an up week or two just to kind of counterbalance this huge down move that we saw. I would not bet on that. I just want to be clear. I'm not saying I'm looking to go long and counter trend this. I'm just saying that I would not be surprised to see a little bit of an up move, especially if we get some momentum to continue here out of this consolidation zone. That being said, bears like myself will be looking likely for a break of the lows here, right? So if we see this price action where we fail at that 103.5 level, keep an eye on this, because this could likely lead down to 102. Why 102? Well, let's scroll out and keep context in mind. This is really interesting, and I've got a bonus thing to show you about this. So if we take a look, I'm going to draw a fancy kind of head and shoulders pattern thing here for a second. If you take a look with me at this head and shoulders, this is kind of an ugly head and shoulders, but hopefully you get the idea, right? Basically, we had this big kind of left shoulder, the head, the right shoulder, nothing too fancy, but what I wanted to really show you is that this move distance right here, when copied and pasted, right? So I just copied and pasted that. What you'll see is that this move, right, from that neckline brings us down right around that equal distance, right? Brings us right down to that 102 zone. And of course, everything in markets, in my view, from a technical perspective, should be treated as a zone. But I find that to be really interesting. So, I wouldn't be surprised if the next leg lower for this dollar move, if it's going to happen, would be a move down to 102 and perhaps even down to that 100 level. I think that's actually very likely for the dollar index this year. Trump wants a weaker dollar. Inflation data has been coming coming in a little bit soft. In fact, let's just take a quick look. Why not? We have the data. Let's look at the U.S. economic heat map for a little bit of a reference point. So just a pulse check on our data here. What you can see is that most of our indicators are pointing towards US dollar bearishness. Now, specifically, where we're getting a lot of bearishness is retail sales was softer than expected. Inflation data was softer than expected or better than expected, right? Which is cool for the US dollar, right? If inflation is coming down, the Fed can cut rates a little bit easier, which is bearish for the US dollar, right? So we have a lot of our factors here pointing bearish for the US dollar. But what about stocks? Well, stocks are a little bit mixed, right? So some stuff like inflation coming down, that's good for stocks. Jobless claims, relatively healthy. That's good for stocks. We also have job openings, decently healthy. But then you have ADP missing expectations, non-farm payrolls, these things kind of missing a little bit. And, we also have manufacturing PMI. So there's some stuff here that gets us a mixed reading for stocks, but it definitely leans bearish for the US dollar at this time. And so when I take a look at the US dollar, that to me tells me that the macro, the big picture stuff, the fundamentals that quite heavily move the markets are still telling me more downside is the likely scenario, not the certainty, because things can change in the data. But the likely scenario is that this trend continues to the downside for the US dollar, in my view. If you're interested in checking out the Edge Finder totally for free, I've got a special announcement for you coming to you this week. If you're not in our Telegram channel, join it right now, because this week we are going to be doing a free access week to the Edge Finder. This is undercover. This has not been publicly announced beyond this video yet. We will be announcing more information on that tomorrow in the Telegram channel. It is completely free to access the Edge Finder starting on Monday. Here's how you get access. Number one, join the Telegram channel. Number two, wait for our message on Monday where we'll drop that access for everybody to use the Edge Finder. So again, take a second to join the Telegram channel, linked in the description down below. So here's the thing, right? So dollar index still looks weak overall. Gold and silver should benefit from this, right? So I just got done doing the metals. I usually do these things in tandem, the US dollar and gold and silver. But I also want to talk about stocks because we just talked a little bit about the economic heat map kind of mixed. The reason I point this out is we can also take a look at some sentiment here. And when we take a look at, for example, put to call ratios is something I look at quite frequently. You can see that for quite some time here recently, we've had a lot of put demand in this market. Now, put demand, if you don't know what a put is, it's a bearish bet that you can make in the stock market. And it matters even if you're not a stock trader. Stick with me for a little bit. Even if you trade euro dollar or gold or something, this is still very relevant to you because it tells you whether the market is risk on or risk off. At the end of the day, if people are buying stocks heavily, stock indices, etc., usually that is indicating a risk on environment. When people are selling those things, like they have been recently, that's more of a risk off environment. And so what we see here is that the put to call ratio has been pretty extremely bearish here recently, showing high amounts of fear as people have been buying puts aggressively. Well, if you've been watching the channel and if you just saw my my thing here, right, I've added a whole bunch of stocks in the last 2 weeks. I bought a whole bunch of stuff. I went shopping on a lot of stocks that I have been wanting to buy for some time. Also, a large position for me. This is a trade, not a long-term position, but a trade. IGV is a software ETF. I have a pretty good size position on this one, and I entered around 90.17, stop loss 81.67. So like I said, I'm really excited for this new trade tracker. It will be coming to VIP members shortly. If you're not a VIP member and would like to be ahead of that, all the information will be in the description down below if you'd like to get access to this when it does drop for members. But IGV, basically a tech sector. I do like technology quite a bit, clearly by my positioning. Most of the stocks that I've selected are tech stocks. And are definitely more poised towards risk on. Look, this past week was a really constructive week for the markets. I actually don't think you could ask for much better of a potential bottoming formation in stocks, because what we saw here is, of course, the big double top where, and again, you can go back and check the cool thing about YouTube is you can go back and watch my streams and videos at this time to make sure that what I'm saying is not lying or sugarcoating. I have been really cautious on stocks until about right here. This is where I started accumulating stock shares. Once we started hitting this level, I started buying some stocks that I liked for the long term. However, there's been something that I've been talking about quite a bit on the channel. We actually put in a very constructive price action week last week. What I mean by that is that this big level, this 5720 that we keep talking about, I am looking for this to potentially break out this coming week. If that happens, I will switch from just accumulating long-term shares passively in my portfolio to actually taking a momentum uptrend trade on the S&P 500. Look, we're still in a bull market. A bull market, by standard traditional definitions, is anytime you are above a 20% pullback in the market. If the market crashes below 20%, they just straight up call this a bear market. So we are not in a bear market, right? Now, from a short-term price action perspective, then yes, I would say that we are in a bearish market. But here's the thing. If you start constructively breaking out of resistance here, this to me starts to look very attractive for upside momentum, and in which case I'll be looking to buy pullbacks aggressively with a stop loss and kind of a momentum trade, right? So I have two different styles of trading: a more dollar cost averaging, longer term position trading style where I do on stocks, options, and currencies. But then I have a momentum trading style where I'm looking to, trail aggressively, like that silver trade that I took or the gold trade that I took profits on. This is where a large amount of my capital allocation goes, is towards my momentum trading style plus fundamentals. So when it comes back to the S&P 500, let's talk about the way this candle closed. We can just take a quick look at the weekly chart, right? Weekly chart was not amazing, but it also certainly wasn't just waterfall, lower, kind of like we've seen the last few weeks, right? We had this big sell, big sells, really heavy sells, some spike off of the lows, and actually, notably, we never retested these lows in this previous week. This is a weekly candle. You can actually see we put in a constructive higher low, but from that daily chart perspective, when we drop down, again, like I said, I'm not like long S&P 500 with a stop loss below here. I'm looking to potentially do that, however, if you get something like this. Breakout, retest, entry here, stop here, looking to trail this higher. Now, I do want to confirm that with the edge finder, however. Again, the reason I keep pulling up this put to call ratio shows you that investors are pretty scared, or they have been pretty scared. It's more moderate now, but if we take a look at the investor sentiment survey, you can still see people are really scared. Survey respondents at a record level since the last 10 years or so, marked down being bearish on the market. And so you know how the markets operate. Most of us know this when we think about it intuitively. The market's not designed for everyone to make money. It's designed for patient, selective professionals to make money in the long term. And when we see the crowd is getting really scared, the risk to reward starts to become really attractive. So I still want to wait for the price action setups, and I also want to wait for edge finder confirmation, but you actually kind of do both of those of what I just said with the edge finder, right? So NASDAQ is getting a +4. So why? Well, COT data, which we have yet to get to, shows institutional positioning is quite bullish on the NASDAQ, right? We saw some accumulation there. Seasonality strong. Retail positioning showing contrarian bullish signals as everybody is scared, as we just got done talking about. And inflation data came in really, really nice, right? So overall, we also have interest rates going lower. I mean, these are positive signals for the NASDAQ. But what's holding us back, Nick? Why don't we have a bullish reading on the NASDAQ? The answer is very simple. Trend is not yet flipped into bullish territory. See that? That is key. This is why I preach on my channel being systematic. I want to be long the NASDAQ and the S&P 500. So bad, right? You can hear it. I'm clearly bullish, but I am staying systematic. I'm waiting for price action to give me the signal to take a proper trade with good risk to reward. I'm not going all in. I'm taking a calculated risk if this flips bullish. And again, I'm trying to practice discipline in all of my videos here, right? I'm sharing with you, I want to be long. I intuitively, I'm like, oh, I think this is going higher. I really want, and I am buying some stuff for long-term perspective, but that's very different, right? When I'm position trading, that's different than a active trade where I can take some bigger size with a specific risk, right? The risk, like I can make a lot more money with those kinds of trades than like the long-term holds on stocks, because again, I'm taking a small, position and just holding it for long-term, right? That's different than like, okay, we break out here and I have a very strong conviction to take that trade. Again, that's what I'm looking for. So how is Edgefinder going to flip to bullish? If if that, or how is that trend going to flip to bullish? Well, here is how it works. I have an indicator on the TradingView chart here called the trend, the A1 momentum indicator. This thing tracks the exact same way the edge finder's calculation does. So when this starts to flip, and guys, we're getting close. If this starts to flip into green territory, what you will see is the edge finder give us a +2 reading. Okay, so that's how that works. I'm close to getting ready for a possible S&P 500 trade, and I have been talking about that for a few weeks here. We'll see if that is, maybe we take that trade and it doesn't work out. Nothing is guaranteed in markets, but for me, I would take that trade every single day of the week, over and over and over, even if that one doesn't work, right? So the reason I say that is because, again, nothing is guaranteed. We could have that happen, and then Trump could make some crazy tweet and we go like this, right? And it could just flop on its, flop like a fish, right? But the point is, I'd take that trade over and over and over because from my back testing, from my system with the edge finder, I know that most likely over the long term, if I take that trade, most of the time I'm going to make money. Not every time, but most of the time I'm going to make money. So I'm going to take it again and again and again with good risk management. I hope that makes sense. Same story, guys, for the NASDAQ. I mentioned I like technology quite a bit. Very interested in watching the NAS as well. So if we get some bottoming confirmations here this coming week, if we start to see breakouts, I'm very interested in the NASDAQ, the S&P 500, and the Dow Jones as well. Dow Jones sitting at a critical level here, guys. Again, waiting for very nice constructive price action on the Dow Jones. Do you see that candle? That is beautiful. So sellers kind of got all excited. They got all, riled up again. Here we go. We're going back down to the lows. And again, the market does a great job at disappointing the masses. Most people right now are very scared, very bearish. They sold their stocks or are continuing to short this market. And again, like I said, the market is generally designed to take money from most people. So be really careful out there if you are a bear. And if you're a bull like me, please understand what I'm saying. I am not saying I'm a bull and I'm going to throw my entire, the mortgage to my house on that trade. That's absolutely not what I'm going to do, right? I'm going to take a constructive trade with a stop loss. And if I lose, I lose. It is part of the process. But I'll take that trade, like I said, over and over because I like the probabilities. And I like the risk to reward quite a bit. Okay, so we talked dollar, we talked currencies, we talked indices, we talked that, but let's take a look now at some currencies. So I've also been talking about quite a bit on my trade setups here. Let's take a look at what we're going to do here is, what am I trying? Let's take out our neutral. That's what I'd like to do. So if I'm just taking a look at this list, you can see we've got some work to do here on the indices. And the top setups indicator here basically just shows me what I want to look for in the upcoming days. At any given time, if you have the edge finder, you can pull up the top setups page, and there's a good chance that I'm watching for the same trade setups. I'm still looking for the technicals to line up with the trades, etc. But this is what I'm looking for pretty much day in, day out. So if I take a look, and specifically when I have a lot of currency options, I do prefer to trade majors. They're more liquid. The cost efficiency of trading them is quite good. So this is really my list, right? So if I take a look at this, I'm watching gold. We already discussed silver. Bitcoin's an interesting one as well, but we'll get those in a second. Let's talk about these two right here, euro and pound. I've been talking about them quite a bit. Let's take a look at the euro, right? So euro, bit of resistance, ran out of steam a little bit. We had a big push up, ran out of steam here, and naturally, again, you want to see this if you're a bull. You want to see pullbacks. And so the question is, now market's coming down to test this area, 1.08. The question then becomes, as you get into this area, do buyers step back in and push this thing up? The narrative that got us here is a dual narrative. It's, sell the US, right? Sell the dollar, sell stocks, buy euro stocks, buy the DAX, right? That's been the story. And part of the reason for that has been, again, because of the uncertainty with the president of the United States, which, again, I don't necessarily think is a forever theme. So right now, people are still getting used to the new administration. And actually, this is a very, very historically, seasonally, a kind of considered, or what's the word I'm looking for? A consistently seen behavior of markets during the first year of a presidency. New president takes office and people are figuring it out for the first 6 months. It's a seasonally expected or observable, right? It's an observable historical trend. That's the word I was looking for. There we go. You got it, Nick. Good job. That's what I've been kind of noticing here is that a lot of this theme here is actually historically visible within the first couple months of a new president. People are still trying to figure things out. There's a lot of volatility. There's a lot of choppiness. Well, people have rushed to things like Europe and gold and bonds and everything else other than U.S. stocks and U.S. dollar. It's been a really interesting theme. If you think that theme is going to continue, the euro might continue to benefit from that. And I wouldn't be surprised if there is a little bit of that for some time. At least in the dollar bearishness, because Trump is so adamant about keeping the dollar bearish, and then Europe is doing a big debt kind of accumulation to spend more money on military stuff. It's a good backdrop for a stronger euro, given that huge military spending could stir the economy and also keep inflation high, forcing the ECB to keep interest rates elevated. That makes the euro look pretty attractive. So I wouldn't be surprised if we do get this pullback and there is some attempt here at the 1.08 level to continue this uptrend that we've been seeing. That being said, the only thing I don't love from a technical perspective about this move is that we're lacking a full pullback into the 38.2% retracement. I don't talk much about like liquidity grabs or anything like that. I don't really find that to be very useful in my trading approach, but a stop hunt here, if it were to just whip down here anyways, I actually love this setup. I'd prefer to call this a quote unquote Wyckoff spring. Basically the idea is you have a key level support that everybody's watching, right? This is ancient market commentary stuff. Anybody who claims this is a recent phenomenon is silly. It's been talked about for 100 years. Wyckoff spring, this idea you have a key level support, it breaks through it briefly and shoots back, faking everybody out, and then reverses up. That concept, right? I love that concept. It's nothing new. Like I said, anybody who claims to have invented that, I'm not calling out any names, but come on. It's a 100-year-old concept. Anyways, back on track here. I actually would love that, right? So we have this key level. Give me a quick fake out and tap into that 38.2% retracement. And then that actually sets me up, in my opinion, for a really nice technical uptrend continuation for the euro. We also have confirmation from the Edge Finder. A +8 score is basically telling you that most of our economic data, technical data, and sentiment data are leaning towards euro bullishness, dollar bearishness. Let's move on to the pound dollar. We can also take a look at this one. If we take a look at pound US dollar, there we go. I love this one quite a bit. In fact, on the currency trading front, this is probably my favorite trading setup that I'm watching. We could actually draw fibs in a couple different ways. If we're drawing it from the extreme lows, we'd probably be looking at a pullback all the way down to 1.2667. If you're drawing it on a more local basis, which I think is probably a little bit more relevant here, we could take this recent push high, right? So push move up higher, that 50% to 61.8% retracement level looks really good to me. So we'll see if we get a pullback here on the pound. This would of course be on the idea that we get a stronger up move on the dollar, which we discussed earlier in the video. This is just a symmetric, a beautiful chart, uptrend, and not to mention, again, pound US dollar getting a +8 on the Edge Finder as well. So that's a nice confirmation on the technicals, on the fundamentals, and the sentiment read. If I take that trade or any of these trades, I got two things to tell you. Number one, it'll get notified inside of our Discord server. So if you're not in the Discord and you'd like to be, let me just show you what that looks like. So within the Discord, every time I take a position, it gets sent directly to our members. So let me just show you, for example, the commodity trade section here. I traded silver, I traded gold. So anytime I take a new position, it gets sent out to our members, any updates, etc. But more importantly than just the trades, you also get breakdowns on why I took the trade, updates on the price action, updates on fundamentals, geopolitical stuff that's going on. I really do my best to keep this a very thorough and an enlightening service for people who are trying to better their trading and understand more logically why trades are being taken by people who have true results. Now, again, I say that, I know it sounds a little arrogant, but genuinely, I believe it's really important that if you're going to follow anybody in the trading space, that you follow somebody who shows you real track records, that shows you real brokerage accounts, like I showed you at the beginning of this video. It's really important, in my view, that you don't waste your time following people do not have any sort of proven trading results. Take a quick look at the yen. And like I said, just as I mentioned, if you'd like to join the VIP group, the link is in the description down below. And that trade tracker is coming soon to our VIP members. So stay tuned. That is where we'll make announcements to everybody in the Discord on how they too can get access to this once it is made publicly or I guess privately available to our VIP members. Okay, so dollar yen retesting a key area around 149.8. Keep an eye on this one as we go into the week. I'll be real with you guys. I've actually lost, or not lost, but I've cooled off on my yen bullishness. And part of the reason for that is if we take a look at the economic heat map for Japan, we can see that stuff has really shifted a little bit here. So what was this like extremely bullish setup for the Japanese yen has really cooled off, and we see some more mixed stuff coming in here. Unemployment rate has also ticked up just a little bit here. We're just losing a little bit of that perfect storm, household spending, etc. So I am still, watching the Japanese yen, but have yet to really, or I'm kind of cooling off on my positions. I actually dropped CHF JPY for I believe it was about a break-even trade. So after all that time, I pretty much broke even on this trade on Friday. I mean, I'll continue to watch these, but yen pairs in general to me don't look as attractive as they did, a couple weeks back. I do want to just show you too. Let's now move into our institutional positioning over here. We'll take a look at our COT data for the week and see what institutional money was up to in the latest report. So if we scroll down here, now, of course, this is your long-term positioning. So we can take a look at, the Swiss franc, CAD, Aussie, Kiwi. These are sort of your most bearish assets. And then South African rand, gold, yen, silver, oil. These things are more on the bullish side. So when we take a look at this, you can see there was a really interesting move with the South African rand. Not really sure what's going on there. Just a massive decrease in both long and shorts, but the shorts contracted way more. So I wouldn't read too far into this. This is kind of a weird, it's an exotic currency pair or currency. So, I'm not really sure how all that works within the futures contracts. Maybe there was some giant short covering that went on with the South African rand. But more importantly, you can see the euro accumulation. Really interesting here. A significant decrease in the number of short contracts that they hold on euro and a modest increase as well in long. So really bullish week, really, overall net bullish week for the euro. We also had net bullishness for the Kiwi, for platinum, copper, NASDAQ, and gold did see some interesting moves. You can see they added some short contracts, but they added a tremendous amount of long contracts, netting a pretty bullish overall week for gold. We can also take a look at Bitcoin, pound. They had pretty much flat. They added longs and shorts. SPX, they decreased both long and shorts. Let's take a look on the sell side. However, you have Nikkei, big sells coming in here, the Australian dollar, and look at our big loser for the day. It's the US dollar. So they sold a whole bunch of US dollar, significant decrease in long contracts and a significant increase in short contracts, netting in a huge bearish week for the US dollar. That kind of counteracts, and it makes a lot of sense with the big accumulation of euro, as these two things are kind of your two top dogs, right? The euro and the dollar. That's why the euro dollar currency pair is so significantly traded. So really worth keeping an eye on that. Japanese yen, they also did do some selling here. That was part of the reason I wanted to pull up the COT data, as I just got done talking about why I'm a little bit less bullish on the Japanese yen at this time. Also wanted to show you the Bitcoin to gold ratio. This is a cool new indicator. Nice way to measure risk on versus risk off. Basically, if this thing is moving up a lot, I would say that's more of a risk on environment. And this thing is moving down, call that more of a risk off environment. Why? Well, because if it's going up, that means they're accumulating Bitcoin way more than gold, right? And if it's moving down, it means that gold is getting accumulated like a currency pair, right? Gold is going up, Bitcoin's going down. So right now, we definitely lean more into a risk-off environment, and I do think that that is worth keeping an eye on going forward. Coming up this week, we do also have the PCE number for the United States. This is the Fed's preferred measurement of inflation. We've seen inflation come down, on sideways. Now we are looking for inflation to stay level. There's some expectations that inflation could go up this year. There's some that it could stay level. If it goes up, it does pose a little bit of an issue for the Fed because they can't cut rates as easily. So this will be a really market-moving event. That happens on Friday. Speaking of inflation, let's take a look at oil because oil is a major input to inflation, guys. You do have to keep this one on your radar. Even if you don't trade oil, highly recommend that if you are a fundamentalist, this is a fundamental chart, right? Oil is really important to the inflation story, so add it to your watch list like it is on mine. If we take a look at this, what you can see is it's been in a pretty confident downtrend. That is until recently where we've started to see a little bit of a breakout in the price of oil. Keep close tabs on this because if we get any geopolitical flare up, if we start to see, Russia and Ukraine relations break down further, if you start to see this scenario, guys, that hurts the story for inflation. Why, Nick? Why would that hurt inflation? Well, think about it. If oil prices are higher and energy costs more and transportation is more expensive, that directly increases the cost to getting goods to your front door or to the grocery store near you. And so the prices everywhere else go up as well, right? Consumers end up paying that increased price because, again, if a shipping company charges more to the grocery store, ultimately they have to charge more in order to not hurt their business performance and start laying people off. So again, really interesting stuff with oil. Keep an eye on it, but it's actually made a lot of progress. And to I guess Trump's credit here, you can see oil prices have come down straight away from the day he was in office. We've seen a continued push lower on oil prices. That was part of his big mandate. I'm not, here just completely giving props to Trump because the S&P 500 has also had some really rocky times in the recent weeks as markets aren't quite sure what he's going to do next. That being said, oil price is much lower here, and that is a very positive thing for the consumer. Why would that be good for the consumer? Well, think about it. If you have to whip out, I'll give you my example. I go to the gas station, and last year, at some points, I would go to the gas station. I'd pay $65 to fill up my Jeep. I drive a Jeep Rubicon. It's like the gray metallic color. It's kind of cool. I like it. But anyways, that now for me is about $50, 50 to 55, depending. Okay, so that may not sound like much, but I drive pretty far for work right now. We have an office in the city, and I moved to a home outside of the city. So I drive a good bit each week, and I probably fill up once a week. So I spend $50 to $55 every week on gas, as opposed to $65. Now, why is that significant? Let's say that it's a $10 to $15 net stays in my pocket, $10 to $15. Now, why? The $10 to $15 may not sound like a whole lot, but you do that by a whole month, and that's 40 to what? 40 to 40, 55, whatever, 60, somewhere in that range, kept in my pocket. Now, for certain people, that may not be a substantial difference in their life. I'm not going to lie, that's not a big thing for me, but for many people, that might mean the difference of going out to eat or going on a trip or making a weekend trip. They have 60 extra bucks or whatever. They go out to eat for the night with their family. So the reason I say that is that difference can play out into the rest of the economy. If people have more money in their pockets, they go out and usually spend it in other places, right? That's what, especially Americans, one thing about Americans, if they have any money, they're going to go spend it. So just something to think about. Oil prices being down is a relief to the consumer. Oil prices going up is a pain to the consumer. Gas prices on a year-over-year basis are down like something like, I don't know, somebody check me on this, but I think it's like 12% or something like that, which is pretty good, right? That's an improvement over the last 12 months. So at one point with the whole 2022 stuff, with Russia and Ukraine, we had oil prices way up in the 120s per barrel. So we've really come down from those levels, and that has been a largely positive thing for the overall a consumer, the state of the consumer not having to pay so much at the gas pump. VIX last week did pretty much have a crush all week. What I mean by that is volatility came down. The expected moves of stuff cooled off a lot. And so people who are, betting on a big market crash right now, they're looking obviously for the VIX to shoot higher, right? Big moves, volatility. People have been buying puts in the last few weeks, have gotten absolutely crushed. Like even if there's nothing other than that. Like if you bought puts in the last few weeks, you got crushed. Now, if they're long dated, like if they're expiring in a couple months, you may have, if the market tanks, an opportunity to make some money. But if you bought short-term puts, and again, I'm not teasing you or making fun of you, trying to make you feel bad, but if you did that, you are absolutely getting crushed in this contraction. And this is a painful lesson for many options traders. If you are going to go out and buy options, be careful, because if you're buying options when everybody else is doing it, you have to pay a ton of premium, which makes your trade very, very risky and costly. And when you have just a normal week of normal volatility, you get crushed. So that's why personally, I really don't like to buy options. I typically like to sell or short options. And that's something that I quite often do inside of our group as well. If you're an options trader, if you like to sell premium, you might consider joining us. It's something I do quite frequently on a lot of the stocks that I like, as well as ETFs that I watch. So VIX, big crush here this past week, and really interesting. I think that actually can continue. Although, with Trump in the White House, I don't think that we're going to just go down and sit at a low 13 or 14 VIX for very long. I think that Trump will always keep people guessing while he's in office, and that will keep a bit of an elevated VIX. I wouldn't be surprised, if we stay somewhere between 16 and 20 for the majority of his administration. We'll see. But again, if you get these big pops, I sold a whole bunch of puts, and so that's why I'm pretty adamant about that. I sold a whole bunch of puts. A lot of those puts are very, very, they're worth a lot less than when people bought them. And as the short seller of those puts, as the market maker, I'm doing quite well with those puts and have actually taken profits on a lot of them already. So, we'll see. But anyways, VIX, where it's at, really interesting stuff here. We'll continue to watch that going into this week. Bitcoin, pretty mixed here past couple weeks, really just chopping around. There's some excitement around the whole, Trump administration doing a Bitcoin reserve kind of thing, or a crypto reserve rather. We'll see how all that plays out. Really, I just think this thing will follow the stock market. If you get a good couple weeks, Bitcoin is likely to break out. And I do like it to the long side. I actually am getting currently a bullish reading on the Edge Finder. If we take a look at our top setups, you can see that Bitcoin getting a +5. I'd like to see that. I'd like to see that kind of trend up a little bit stronger, and I'd love to get a little bit more of a breakout here going on this one before I try again. I did take a loss on Bitcoin. Tried to capture this move here, stopped out. It was kind of a more intraday trade. Was in one day and out the next morning. So not a great trade for me. But I am looking for the 4-hour chart to start breaking out, show some more signs of strength before I take another stab on the long side at Bitcoin. But watching it pretty close going into this week. Guys, we're doing the free week here for Edge Finder. The link is in the description down below. Also, if you're looking for a new prop firm to trade with, check out DNA Funded in the description down below. They offer discounts for viewers on my channel. We also have 8cap and Vantage. All of the things in the brokers section down below will get you free sign-up perks when you check them out. So if you'd like to support my work here today without spending any money, check out the description. There's several referrals for brokerages that might benefit you. Or if you'd like to check out our products, you can join the VIP group or the Edge Finder. Thank you very much for watching. Have a great day.